All right, so Nvidia, right now, they're the undisputed king of the whole AI revolution. I mean, their stock price has just shattered all the records. But what if I told you that some of the smartest investors on the planet are quietly betting that it's all going to come crashing down? Today, we're going to dig into the hidden story behind Nvidia's incredible success.
And just to give you an idea of the scale we're talking about, Nvidia just posted $57 billion in revenue for a single quarter. That's not just good. It's a number that has totally reshaped the entire tech landscape. It's why their stock has gone absolutely stratospheric.
And you've got the company's CEO, the super charismatic Jensen Huang, and he's adamant. He says, nope, this is not a bubble. He claims the demand for their AI chips is, and I'm quoting here, insatiable, and it's only gonna get bigger. Look, it's a really compelling story for sure, but it might not be the whole story.
But behind the scenes, something strange is happening. Some of the biggest names in finance, I'm talking about people who built their fortunes on seeing things that the rest of us miss, they're quietly cashing out. We're talking Peter Thiel, the legendary tech investor, SoftBank, a huge global player, and even Michael Burry, the guy who famously predicted the 2008 financial crisis. They're all selling.
So that just raises this huge multi-billion-dollar question, right? What did these guys know that the rest of the market doesn't? Well, to find the answer, we've got to tune out all the hype and really dig into the numbers. And it all starts with a few strange little anomalies in their financial reports.
Okay, so our first clue, it's a financial metric that sounds kind of complicated, but trust me, it's actually super simple. It's called Days Sales Outstanding, or just DSO for short. And what it does is it just measures how quickly a company gets paid the cash it's owed by its customers. And for this, a lower number is always better. It means the money's coming in the door faster. And this is where it starts to get a little weird. Nvidia takes, on average, 53 days to get paid. Now, look at their competitors. AMD gets their money in 42 days, Intel, 38, and TSMC, just 35 days. So why would a company with insatiable demand have to wait so much longer to get paid? For a lot of analysts, that's a huge red flag. Okay, so on one hand, the cash is coming in kind of slow, but the plot really thickens when you look at what's going on in their warehouses. At the same time they're waiting longer to get paid, their inventory of unsold chips is actually growing, and at an alarming rate. Get this. In just one quarter, Nvidia's unsold inventory jumped by a massive 32%. I mean, let that sink in for a second. If demand was really off the charts, if everyone was desperate to buy your stuff, you'd expect your shelves to be empty, right? But Nvidia's are just getting fuller and fuller. And look, this isn't just some abstract theory. We saw this exact thing play out last year. There was a genuine shortage of their H100 chips, and their inventory did exactly what you'd expect. It dropped, big time. But today, they're making similar claims about skyrocketing demand, and the complete opposite is happening. The numbers, they just don't add up. And that brings us to our third, and maybe the most revealing anomaly of all. It's this mysterious gap. A gap between the profits Nvidia says it's making and the actual cash that's landing in their bank account. So on paper, Nvidia had this unbelievable quarter, right? They reported a net profit of $19.3 billion. But when you look at the actual cash that came in, it was only $14.5 billion. That's a nearly $5 billion hole between the profit they claimed and the cash they actually collected. So where did that missing $5 billion go? Well, it's not in their bank account. It's sitting in those two places we just talked about. A bunch of it is locked up in unpaid invoices from customers who are taking longer to pay. And the rest is literally just sitting on shelves as unsold chips. So the profits are on paper, but the cash isn't really there. At least, not yet. So let's recap. We've got three big red flags: slow payments, rising inventory, and missing cash. Now look, this could all just be the growing pains of a company that's expanding like crazy. But some analysts believe these aren't just separate issues. They think they're all symptoms of something much bigger, a much more complex financial game being played. The theory is something called round tripping, and it's where money basically just moves in a circle. Here's how it might work. Step 1. Nvidia invests a bunch of money into a promising AI startup.
Step 2, that startup turns around and uses that same money to buy a bunch of Nvidia's expensive chips. Step 3, Nvidia books that sale as brand new revenue. See what happened? The money just came right back to them, but on the books, it looks like a totally legitimate sale from a new customer.
And listen, this isn't just some hypothetical idea. We're seeing reports of these massive, tangled-up deals all across the tech industry. It's estimated that just a handful of the big players have made over $600 billion in these kinds of cross-commitments with each other. It's this giant, complex web where one company's investment in another can almost magically become its own revenue.
So all of this, it leaves us at a crossroads, really. There are two completely different ways to look at what's really going on at Nvidia. Okay, on one hand, you've got the super optimistic view, the bull case. It says, hey, this is just the cost of building a world-changing industry from scratch. It's an aggressive strategy, sure, but it's necessary to kickstart everything, and the real profits will come in a few years. But then you have the other side, the pessimistic view, and it says this is a classic financial bubble. It's a house of cards built on clever accounting and the circular funding, and it just can't last forever.
You know, Peter Thiel's fund kind of put it perfectly. They basically said that Nvidia's current stock price is acting like the future of AI is a done deal, a sure thing, when that level of certainty just doesn't exist yet. But then you have Jensen Huang, Nvidia's CEO, and he sees it completely differently. He argues they've built something so essential, so foundational for the future, that its success is basically guaranteed. As he puts it, it just works. It's incredible.
And really, that's what this all boils down to. Nobody is arguing that Nvidia's technology isn't revolutionary. It absolutely is. The real debate, the multi-trillion-dollar question, is whether the business model behind this historic stock run is built to last. So, is this a genuine revolution or a brilliant financial illusion? I'm really curious to know what you think. Let me know in the comments. Thanks for tuning in.